Good afternoon, Bueller Buys community and friends. Sherman here, coming to you this afternoon, talking to you about a few things for the month of December. Uh, so far, we've had some pretty good trades going on. I have had a few questions coming my way to how I use certain things, so we'll be going over that in this video. To start off with, we have our TA routine, which I'm going to quickly go over. It's proof of effectiveness with these two charts. So if you decide you want to pull up these charts on your own, chart them, see how the BB system is as effective as it is, feel free. Well, I'll be utilizing Fibonacci retracements, showing you how I use them, their effectiveness there. I'll be giving a shout out to a couple of people. I'll be going over the watch list, which is this right here, of why I choose these tickers. And we'll be going over the trade reviews and any examples. All of these are my trades for the past couple of weeks, since we've had full December weeks. As you can see, the first full week of December was December 5th to the 9th. So that's what we got going on. Happy to say that, on a quick note, that I only have one loser these past couple of weeks. I'm at about a 95% win rate, utilizing the BB system, the strategy that we have, the types of entries that we use. So we'll be going over all this. And when I go over the reviews, I do have these pulled up. So if you want to pull these up on your own charts, see what I did, you're more than welcome to check out the charts on these dates. And if you see anything with a 5-minute chart, feel free to take it down to the 2-minute and the 1-minute. If you'd like to also follow along with what I did, because I do switch between the 2-minute, 1-minute, and the 5-minute. So to start off with, I'm gonna go to AT&T, because here is like one of my favorite examples of the TA routine working at its finest. So I'm going to go to the weekly chart, the max weekly. And I want everyone to notice how AT&T has been moving throughout all these years. We're already back in the 2000s. And the reason for that is I'm not going to be able to utilize any levels. I can't use these levels because I don't have anything below. And we're already over here. You can see we're well below wherever it was in that time period, about 2008, I believe. Yeah. So that's not going to work. I can't use these levels unless I just want to go with the rally here. But that's not really what it's not going to work for me. You know, I need something with a base, enough levels above and below the current price. So with that, I chose the .com bubble rally. And the reason I'm on the weekly chart is because this stock AT&T doesn't move as much as I would like it to. Considering how important AT&T is, I don't think that this is really a stock that should be traded on the intraday time frame. But with that being said, the weekly can be used for the daily chart, and this is what I did. So I chose, I'm assuming this is like the low before the rally, and I choose this level, and I just, as you can see in my previous video how I do it, I'm literally just grabbing the levels, the closes of these green emerging candles. So I did that until I figured I was well above the current price, which right now it's $18.49, and the highest level that I got was $25.08. And if you did want to keep grabbing levels, that is certainly acceptable. You know, you're more than welcome to keep grabbing levels until we get to about here, and then we have this nice gap up, which I'm not sure what happened there, but I'm guessing that's a spike up that we had in 1999. Whatever happened there. Anyway, so these are meant to be used on the daily time frame. and this is going to be my proof, part of my proof of how well these work. So, we had earnings not that long ago, and if you know anything about earnings, they can be extremely random. There is no real direction it can take. It can even fall flat. The expectations are met or not met. It's a lot of variables involved. And on a side note, I don't recommend trading the earnings. There are factors like IV crush, that where the volatility. Basically, what happens is they price in the contracts for earnings, and after the earnings comes out, it literally just devalues the entire option chain unless you are in a contract that where the stock moved a decent amount. So if anyone knows about that Netflix earnings in the springtime, and I believe it was back in March or whenever it was, I was able to actually make extremely profit. It was an extremely profitable trade, but at the same time, these should be considered mostly, for the most part, lottery trades. Playing with profits, not putting in a whole lot of money, and that's what I'm going to say about that. So anyway, you see, we had earnings back in October, and this is going to be the proof. Oh, and also as a side note, I did not mark any 50% points in between those emerging candles, so I want everyone to take note of that. I don't need you. So here's my proof. This is the earnings candle. The earnings candle, literally 3 of the points here, the low, the high, and the close, all of them are historical levels, with this one being the exact midpoint between those 2 emerging candles back in 1999, or whenever they pulled those levels from. That is my proof. There was absolutely no reason that the earnings went all the way up here to this exact point. It could have gone here. It could have went anywhere. It could have went all the way here. You know, it doesn't. They actually make sense where all these line up. The only one being the open is the one that doesn't line up with any of these levels. That's not coincidence. That is high probability of what is going to occur. This is actually one that if it wasn't for earnings, that the catalyst being the earnings, and you having to worry about IV crush, you can literally predict all of this. Oh, it goes. And generally, you would want to see something like, if it crosses above this level, you'll see this level, and then crossing the next ones. But none of this is a coincidence. That's part of my proof. It's astounding, and the fact that these levels are from so long ago, that's the part that gets me. It's like, oh, they're from 1999. Yeah, but they still work. They still work. So that's what I wanted to show everybody. And I wanted to show an example of Ford, because I remember a while ago I wanted to show how well the BB system works to everyone. And this is not going to be a ticker that we're trading a whole lot. So that's why I picked this one. I was just bored one day, and I wanted to see what was going on. And that's what I had done. 11:17, 5 minutes. Okay. Just give me a second so I can properly show everyone. Okay, that's good enough. So, this not being a ticker that we trade a whole lot of, I wanted to show everyone how well it works, the BP system. And I am using the intraday levels here, I believe. Yeah, I got the previous day low here. So, and 1357. So, before I start this, I want to show where I get this 1357 level from, because I didn't grab it out of nowhere, but it's not coming from the TA routine either. So, I'll go to the daily time frame to show everyone. Remember, this 1357. You can see that it's a nice resistance here. We open right there, and then we kind of close below. We don't really get too far above it. Then the next day we gap down, wick all the way up there, and it doesn't do anything. In fact, it closes lower. Next day we get a green one, gap down, but push all the way up. Again, another gap up, but can't really hold it. Wicks above it, but not doing anything. Next day we finally cross it. Again, we gap up just a little bit, but crossing below the open, so it kind of touches above it. So now this old resistance is now becoming some kind of support where it was able to bounce off of it. And then the next day it gaps down, using this as resistance again. It wicks above it. Nope, it doesn't really want to keep it there. Wicks back down. Not wicks back down, but it closes below here. So finally we gap up. I believe there's a dividend payment. So we finally get a little bit of red there. And then after a couple days, after all this little sideways action here for 5 days, we finally get a green open here. Wicks down and is now using this as support and is able to close green. And then it does it again over here. Again, green open, wicking down, using 1357 as support, wicking back up. And there's a lot of price action going on at that level. It's no coincidence, and the reason I'm picking it is because we have a lot of opens and close. Actually, mostly opens happening here and one close there. Nice bounce up there, and it rejects it. Again, another resistance. And it continued on. This is only a couple of days ago, the 14th. So until this past week's news with FOMC, CPI, all that to drive the market lower, it still used this one as a pretty decent support / resistance, depending on whatever side we're on. Anyway, so that's where I got that level from. Then let me go back to that time frame to show my example. On the 17th. Here we are. So this is the example I wanted to show. We have a slight head and shoulders pattern forming here. You know, this is the head. We got a shoulder here and a shoulder here, right at where I marked the 40% entry. And for those of you who don't know, that this pattern really is a bearish pattern. When we start to get to this right shoulder, there is a nice possibility that we start to continue lower, getting a nice channel down. But as you can see, we don't. And let's see, head and shoulders pattern, bearish pattern, but 1357, which I just talked about, is from the daily chart. And that old resistance is now new support. So that's something you want to look out for. You don't want to necessarily just get into a bearish pattern when it's at support. There is a good likelihood that we just kind of reject that this play becomes invalidated. So that's something that I do look out for. Not every bearish pattern is something that I'm going to play. If a bearish pattern is happening as support or a bullish pattern is happening at resistance, I'm just simply not going to play it. That's my strategy. I don't take low probability trades. The probability that, especially in this market, that we actually get follow through of anything, it should not be expected. We should be expecting rejections, fake outs. That's what the bear market is. Nothing's going to follow through. If we go up, we're not going to necessarily continue to go up. Doesn't mean it doesn't have to happen, but that's why we only take high probability trades. That's what most of us do, and that's what we stick to. So, I got my bearish scenario here. Even though this is support, it still can break below. And this little head and shoulders, which is very minimal as is, can continue lower to the next support, wherever, probably the 1337. It's not impossible there. So here's my bullish scenario. We did test the current day open multiple times. This is the current day open at 1366. You see, we open, we get low, and then we got a test here, getting above, another test. And really, any of these, the reason I'm picking this as my 40% entry is because that is the first time that we go above with increasing volume. That's the reason. A 40% entry will have increasing volume through. It doesn't have to. Technically, the 40% entry is just the first breakthrough, but I like to consider it with volume. That's high confidence right there. It is possible to enter right here with a tight stop loss, which I would say for my bear scenario, by the way, the stop loss is the current day open. So once it got above there in this 40% entry, it invalidated my bearish play. And even if it does, that doesn't mean I'm not going to take, again, I'm not going to take a low probability trade. As soon as I see it doing this action at the current day open, and then especially here, that's it. It's over. That bear scenario is invalidated for me. If it continues lower, so be it, but it's going to happen without me. And I'm comfortable with that. So, back to my bullish scenario. Got the 40% with increasing volume here. That's a good entry that I would take. Nice bearish scenario happening where we get some decreasing volume after we hit the current day open, the rejection of it. And take note of that, because that's where you're going to see some kind of weakness happening. And it does start to increase here, but not enough to really surpass the bulls in that first rejection. And then the next candle, we get a nice hammer rejecting whatever. You see, it's rejecting this level 2 right here to the downside, and it's not doing it once or twice. It's pretty much doing it right here too. So again, there's so many things to take note of that you need to realize. Oh, all this is happening. It's not right. Nobody should be thinking bearish right here, especially with these hammers happening right there. Until we actually get a break below that level, let me redraw it again. Unless you get like a break below here with volume, there is absolutely no reason to be thinking puts at this point. At the very least, if you wanted to be in something, you could be in calls. And even then, I'm not the most thrilled with this entry. This is a 40% technically, but it's still not really crossing above that much. It's right there. The high of this candle is the open. It's the next one that we start to get a high over it, but the open is, again, at the open of this candle is the current day open. We don't close above it. We're just rejecting it. So here we get our 80% entry. High confidence. Nice little 3-bar play happening here. Which, if you don't know what a 3-bar play is, do go to Discord and review it through the educational section and the educational server. There are very fine examples there, and Highly recommend it. And again, with this trade, we're not gonna. We have a couple of exits there that you should be taking if you enter on this. Here is the first target. My first target is the high of day. That's the first target. If you're in one contract, you should really just be taking it here all the way up to here, and that's it. Take profits. If you're more than one, you could take your initial exit here and take it all the way up to the previous day low. You're not really going to take the first. If you're in one contract, you really shouldn't be taking it all the way up here. That's not what you do. You take your profits, scale out gradually. You can even take a midpoint in between all this. Let's say I want to mess around. I'm just going to pick a level, 1380. Just because. That's not what I want to do. You know, I get 1380. That's fine. Nice place to take profits. I mean, at that point, you already have a nice buffer, too. There's really no reason to take one all the way from here to all the way up there. What you can also do is, I like to ride the 9. So if you are in more than one contract, and let's say it doesn't quite reach this level, and then we cross below, that's where you can take profits too, in this spot where it's crossing below. And you'll still come out with decent profits, as well as a really passive strategy. Again, this is not meant to just be taking one contract. I'm repeating this so it gets through everyone's heads. So that's my example. And the proof of effectiveness. The combination of the BB system. Using that support level of 1357 here, that's something that is part of that TA routine that you are able to do. You are allowed to take support and resistance levels. Just take note of it. It's not absolutely necessary, though. I don't do that with all my charts. But if you see it, take note of it. It's as simple as that. You know, when I saw this trade happening, I looked for multiple reasons to be in for either side. I got my bear scenario and I got my bullish scenario, and I'm thinking, well, I see this head and shoulders pattern, but why is it resisting here? So I look at that. I look at the bigger time frame right there. And that's where I get the level from. It's you need to start looking at the daily time frame too. You can't ignore it. If you're doing intraday trades, scale out, get bigger. You know, see what's happening. You know, every day in Bueller's streams, we go through multiple scenarios of what can happen and what do bulls want and what do bears want are the two questions that you have to ask yourself every single day. That's why it's like, if you're going to pick a side, you're already missing out on half of the reasoning. It doesn't have to do anything. It could even just be one of these type of candles where it closes flat. You know, we get the kind of day that it just, the whole day it just kind of looks like that. And we get that kind of price action. You need to be prepared to do something, to not do something. I mean, rather sit on your hands. So that's you can't be biased. You have to take everything into account. You know, my father, he is a day trader as well, and some of the things he says I'm not the most thrilled of. You know, he's a bit old school. He doesn't like to take losses. In fact, he kind of mocks the stop loss to an extent, and he does pretty good, I must say. But that's not what I do. I'm taking high probability trades with reasoning. If I lose on the trade, it's because it hit my stop loss. I'm not going to lose more than that. And because I'm taking the high probability trade, the likelihood that it hits my stop loss is not going to be that high. It's not. That's why I have the win rate these past 2 weeks that I have. I've only been taking the high probability trades. So that's just what I wanted to go over. This does work. It does. And I'm not gonna fault the system at all. I've been using it for 3 years, and that's it. So I want to go over to the next segment, which is the Fibonacci retracement. I've been getting a couple of questions on how I use it, and so here I'll show what I do. I'm gonna start with ExxonMobil because I found a pretty good trade opportunity using the Fibonacci retracement with the previous day levels, actually. So I have these marked. I do have to clear these for Monday. I'll be marking these intraday levels for that. But for now, for this video, you guys can see how I use it. So on Friday, there was some greenage going on in the pre-market in the last 5 minutes. So what I'm doing is kind of catching the entirety of this move. And I'm going to catch the Fibonacci levels in this area. I'm only going to use the 50% and the 61.8 and 65%. That's the golden pocket right there. The 61.8 and the 65% is the golden pocket. As you can see, I'll have it with yellow lines there, and with 50% mark, also known as the control point, as the red line. So what I'm looking for here is I get that first move, and I am counting the pre-market because it is continuation. As you can see, this is already working to perfection, in my opinion. So we get that nice pump up. It's going to go back down. Where does it go back down to? Directly to golden pocket. It's literally rejecting the golden pocket right there. That's my way of using it. And I do it wick to wick. The only time I'm going to do body to body, like say from here to there, that's body to body, is when I'm searching for like an open to close. So like with this gap here, it wouldn't be the worst idea to just, let me take away this Fibonacci here and I'll put it back up after. So you get the close of this candle to the open of this candle. And as you can see, we do get some kind of price action going on here. We are rejecting on the other end a couple of times before we finally break through. This is not my favorite use of it, but it can be effective. So that's when I do the body-to-body Fibonacci retracement. In most cases, otherwise, I am just going to be doing a wick-to-wick. I'm not really going to be drawing the Fibonacci as many times from open to closes anyway. It's not my favorite. So anyway, I catch the whole move. Where we start to where we end. You always draw in the direction that you go. If this was red, you'd be drawing down. So that's what I did. As you can see, we reject the golden pocket, finally get above the pre-market high. A little bit of rejection at the high of day. Don't get it. And let's see, we go back down, and we're rejecting the control point now. And we don't ever get below that. We are literally wicking to it, but not doing anything. And this is also the current day open. This is like, when you have the current day open here, you have like even more reason to think, oh, this could either bounce right off of here, or if we finally get a break below here, then at the very least I have the golden pocket to look as a target. So that's how I'm using them. They're reference points. And I want to show a pretty cool chart of how well the Fibonacci works. This is my chart. WBTF stands for way bigger time frame. This is going to be the quarterly chart that I'm going to go on. 4 years should be fine. As you can see, I already have my Fibonacci there. And I do have levels there too. But as you can see, I catch the bottom of this candle to where we finally start to slow down. And where are we finally getting some greenage again? 50% mark right there. It's not coincidence. These Fibonacci levels do work. It's being used everywhere. It's so underrated. If you do a little bit of research on the Fibonacci sequence, and it's everywhere. And you kind of get this spiral going on. If you they simply call it a Fibonacci. It's everywhere. You look at spiral galaxies, whirlpools, hurricanes, even snail shells. I read somewhere that when it comes to the pressures of the eggshell, of an egg, how you can't really squeeze it from the top to the bottom. Again, there's Fibonacci involved there. Definitely do some research in it if you're a bit nerdish like I am. And once you see all that working, it's fantastic to see it in action. So that's how I'm using the Fibonacci. I don't really want to confuse too many people. It's as simple as that. So real quick, I do want to give a shout out to a couple of people for, just to be nice. My friend Devin, the Nerdy Bicep, will be doing one-on-one mentorships. So if any of you are interested in a mentorship, my friend Devin is a fantastic trader, one of the best in the community. You will be in fantastic hands if you take this mentorship. Feel free to DM him at _nerdy_bicep. He is a very disciplined trader. His lifestyle is disciplined. He's disciplined. Trust me, there aren't too many better people that you could choose to do this with. If you do the one-on-one with him, this is what you get. Oops, I'm sorry. So, for beginners and seasoned traders, so either or, if you do have some experience with this, this is still something that you should consider, because Devin is a fantastic trader. He does implement his own strategies into the BB system, and they work, because the BB system still does work on just about any time frame. And Devin's style is he scalps a lot, so he'll be on the 2-minute time frame and the 10-minute time frame. If you join this mentorship with him, you will have one-on-one sessions with him. You do get to call him, and so much more. So anyway, if you are interested, do DM him through here, or if you know his Discord, I can pull it up real quick. This is his tag, so definitely DM him if you have any questions, or if you want to message me, I can direct you to him. And also, I want to give a shout out to my friend Duke, because I did take a few of his trades. When you see that I took 3 Duke bot trades, these come from Duke. And I'm just clicking things. Here we go. So I want to show how Duke nuked him. This is his Discord, so if you want to DM him, or he also does one-on-ones. As you can see, this is just this past week. He has really good entries and exits for his final exit, because he will scale out, and they are fantastic. He has winners and losers like everyone else, but the way he does his trades, it's very intricate. Lots of research goes into it. Highly recommend that. And by the way, if you do join the Bueller Buys community with a premium membership, you do get access to the Duke bot. So you will be able to see all his trades. I'm not going to pull it up because he's got some trades that are active, and I don't want to just give them away without his permission. I don't want to do that, because he does provide his services for a price. because he's in multiple servers too. So there's that. I simply just copied and pasted his picture so I wouldn't have to go to his channel to show everyone. So anyway, those are the shout outs out of the way. You guys can we can resume. So the watch list, I'm really not gonna go over the watch list too much. I did go over in my previous video why all these tickers are on here. And I'm just gonna give a quick rundown. SPY, QQQ, Apple, Microsoft, that's all self-explanatory. SPY is the S&P 500. QQQ is the Nasdaq 100. Apple and Microsoft are number 1 and 2 in weights for S&P, and the Dow and the Nasdaq for that matter. Amazon and Tesla are the 2 top weights in discretionary. Nvidia and AMD are the top semiconductors. Google, Netflix are both high in the communication sector. NEO and BABA are my Chinese tickers that I like to trade once in a while. BRKB is the number 1 in financials, as well as JPM. So do consider JPM as well. XOM is number 1 on the energy sector and number 10 overall. And I got Boeing here because you might as well have an industrial with all these sectors that you have in here, and is a really good ticker to trade. So that's it. I want to finally go through my trade reviews. I don't want to take too much more time on these, so I have them all organized here. And again, as I mentioned in the beginning of the video, you can see this is a Boeing call that I took on December 5th, and I traded it on the 2-minute. Definitely, if you see any of the 5-minute, definitely feel free to check on the 2-minute and the 1-minute, as I do trade on them sometimes. So start with the Boeing put. So this is what I did here. I believe there's an intraday level that I'm taking here, but again, this is a scalp, so it's okay. So I take the contract in this area because I start to see the weakness I'm sorry, I took a put. Yeah, that's the reason why I'm getting confused. This was a put. Or was it? I'm forgetting what I did here now. My apologies. I'm guessing I took a call, and this is like my 40% entry here with high day. And then as we start to get that weakness to the downside as well, because we get it up here and we start to get it up here and we start to get some increasing volume here. I believe I take it here and take it all the way up here for 12%. And this is really quick. This is only a 2-minute chart, so each of these candlesticks is only 2 minutes. Next one is a Google put. That I took also on December 5th. Oh, this one was good. Okay. Entered here with decreasing volume on the way down. This is okay. Yeah, so I kind of get the 80% entry on I'm guessing this is either the previous day open or close, either or. Depends on how we did the other day. So decreasing volume on the way up gives me more confidence that we still will go to the downside, especially after we kind of tested here. This is also another trade that you can take. As you can see from the other side, you have increasing volume through here to the upside. And here you kind of get a rejection off of the previous day close or open, again, whichever is which. And as you start to get this decreasing volume here, you just kind of take your profits on the upside. So on the flip side, I did the opposite. I took puts and I take them to the next level. I held them a little bit longer than the first target here because we're already right there. So I just take them here. And whatever happened here was after. I'm not too sure. But those are my scalps. This one only took about 20 minutes. Sorry, this really wasn't a scalp. I'm confusing it with the 2-minute. But in any case, this is textbook. For either side, really. I could have taken calls over here once it started to reject this. That's what you need to start seeing as well. You need to start seeing how we can get both sides. Entered here with decreasing volume on the down. Got increasing volume on the downside too. Yep. Oh, that's another reason why I exited over here, because when we start to get through these candles, we are getting some increasing volume. And as we go through here, we still have a good amount of volume, so I'm still in. And then when I see it starts to decrease, I'm like, okay, that's enough. And as you can see, the decreasing volume was enough to get the rejection of the 121 cent level here. So whatever happened after, it probably could have been another 80% entry to the downside. Where if we get a red candle here and it breaks below with volume, definitely another spot that you can take profit. Not take profits, but if you have runners, to still take it down to maybe the current day open or a midpoint in between that. So those are the possibilities. I took 17% on that trade. Entered at 108 to 130. So if you have a few contracts, it's a nice 60 to $100 depending on how many you have. Okay. So on to the next one. Amazon put. Oh, we did this one together. Yeah, this one was good. And it's a very similar trade. I see we got the 40 and 80% entry within this entire oval. You see this 90.65 level is where is the previous day close? I'm guessing the previous day close is around this area here because it was rejecting it as well, as I mentioned in my explanation. So we got both. We're definitely not getting above this yet. And then we're getting a little bit of increasing volume. So I kind of enter right there. Once I see that, I'm like, okay, well, you know what? I'm just gonna make my stop loss a little tighter because it is a bit early. These are the 5-minute candles, so it's 15 minutes when I enter, and I take it all the way down to 89.50, which was my initial target, but I wasn't using the 90 MA to take it all the way down here. This is a pretty good distance on the way down, and I don't really want to be holding it through consolidation. So once we got some nice separation from the 90 MA, plus the decreasing volume that happens here, I'm like, okay, well, I'm out. And I believe I got out at this candle. So it was green and I got out there. I didn't even get it to the bottom of this. I don't remember how much I made on that. Maybe this was mental, that's why. 16th. Oh, this was yesterday. Okay. Okay. So was it yesterday? No, no, I'm sorry. The charts are just messed up. The date here. So, but that was my trade. Sorry, I couldn't give you a price, but I guess it was mental. That's why I didn't put a contract. This is on December 7th. Okay, very simple trade. Use that. I'm guessing 88.25 level. I see that some nice increasing volume on the way down. We had already tested it here, so nice way for me to take some contracts and take it on the way down. And once I start to see this consolidation, I'm out. And this contract was cheap, but I still get 9% on it. So if you're in 10 contracts, you got 9% right there. That's easy money. And 9% is nothing to sneeze at. That's what we do in this community. We're getting to first base. We're not getting home runs all the time. I do get them occasionally, but that's part of the deal. really you just want to secure your profits at the end of the day anyway. So let me just close these tabs. That's Amazon put from December 7th. So let's go to my next trade, the Apple put. 3.2%. I'm really not going to go into too much detail. I took the 3-bar play, but I was a bit late, so that's probably why I have a small percentage. And when on the 3-bar plays, I'm just going to be taking it once I got that separation from the 9 EMA. Nice 141 psychological level happening there, so no need to be greedy there. And I took a scalp at the end of the day later on for another 0.5%. Really, not much to trade on there. Again, increasing volume, but I probably was between the contracts not maybe being out of the money. I believe these were a bit out of the money, and not having a whole ton of movement. I'm only able to grab 0.5%. I use that increasing volume here to enter and get my exit. Because at this time of the day, I'm really not trying to get much. In fact, I wouldn't recommend too many people try to do this trade. Because this isn't a high confidence trade. I'm not even going to pull it up on the big screen. That It's just one of those. And technically it is a winner, so I'm going to take it. Okay. Microsoft put from December 8th. This one was okay. I got 5% on that. And we used Fibonacci. My friend. So this is what I did here. I take the nice ride. I take the Fibonacci off of the ride down. And you can see we start to reject the control point of here. And we do have increasing volume, but this is a indecisive candle. So don't let this green candle trick you. This is a high volume but indecisive candle. So once we start to make our decision, I see that we're rejecting the control point. I'm in and out, and I'm taking profits at 243. That's my target. It's a scalp. It's only 4 minutes that I'm in this trade. This is the 2-minute chart. And in fact, there is reasoning for me to go to the upside as well. Let's see, I get a nice movement up. In fact, on the other side, even with this Fibonacci, we got a nice close over the control point. Even though this isn't decisive, this is a close over the control point. Nice rejection of 243. Getting back up to 243.77. Probably this is right here. This is the 243.77 should be what you're searching for. Getting a nice retest of it to the upside. Nice hammer, bullish indicator. Taking it all the way up to 247.05. So I did the opposite. That's something that a lot of us will do occasionally. We will be scalping the opposite contract. So instead of scalping a put, really I should have been measuring for calls, but I can only take what I see in the moment. Hindsight is 2020, and that's it. That's all we could do is be better to visualize both sides. I'm not at that point yet where I'm the most comfortable automatically switching between calls and puts. I don't like to do that all the time. You can get wishy-washy if you're not disciplined enough. So that's everything. I do know people in the chat that they do that and they are disciplined, better traders than me, and they will do that trade. They see, okay, they grab their puts. Now's the time to get into calls. Not for the reason that to get into calls because they got out of puts, but because they took that scalp here. They are getting the 80% entry to the upside. You always got to have the reasoning. Later that day, I did an Apple put. What did I do here? Take another 5.5%. Another Fibonacci. I guess I took the move. The move was probably all the way down here, and then I took it all the way up. Get my levels here. And what do I do here? I guess I took calls as it was rejecting the control point. and I take it to move up here. Because that's what I'm expecting it to do. I'm expecting, my reasoning is, once we get this move, my retracement will, that we fall back down to here after we slow down in this area. I'm drawing the Fibonacci. I'm expecting that we get back down to this area and that we're going to bounce off it, which we do. Again, these Fibonacci retracements, you shouldn't be holding on to these that long solely off of that. As you can see, I really don't have any levels in between here. It's a scalp. Just take the move, take it up. And I guess once at the close of that candle, I probably took profits here. I could have stated it, but at this point in the day, at 11 o'clock, I'm mostly done with my trades. I already do the main ones. As you can see, I did Microsoft, which was my main one, and I'm not trying to double dip all day. That's something that's another thing. You don't want to be over trading. I'm really not taking more than 3 on any single day. And Bueller will be the one to tell you himself. The human brain can only handle about 3 emotional decisions a day. That each trade that you make is an emotional decision. Putting your money on the line is an emotional decision. It's very difficult to not have any emotion at all. And that's where the discipline comes in. If you're disciplined with yourself, you can trade with as little emotion as possible in the trade. If you lose money, you lose money. Just make sure that it's at a stop loss that's in line with your trade plan. Just because on a lot of these, you'll see I have a stop loss set up. If I do a scalp, I may not have wrote the stop loss, but I do have one. Every single time. A lot of these, because say on a Fibonacci, my stop loss might be, if we cross below the golden pocket, I'm really just going to get out. And if we start to bounce off of the 100, then that gives me a reason to enter, but I'm not going to hold it through the entirety of this. That's my stop loss. And if we continue, I'll see any price action going on here. Because if I'm in a call and we start to continue lower than even this, I'm really going to be wrecked. My contracts are going to be devalued. I don't want to be filled with hope. We don't have hope. We don't do that here. We have reasoning, high probability trades. And I know I'm repeating myself, but that's what this is. You keep taking these trades. And as you can see, every single one of these trades just about will cross a level, have volume involved. Most of them are a retest of some sort. That's my bread and butter, retest. So, on to the next trade review. Sorry for the little rant. Okay, again, easy trade. I'm on the 1 minute on this one. This is the 40% entry. Nice increase in volume. Break above. I see that we start to slow down here. I'm like, okay, I'm gonna wait till we get the open, the current day open. See what we do there. That's where we get our 80%. Bouncing off of this 394 level, and the current day open, I'm in, and I'm taking profits at the pre-MH. I think this one was mental, but or I missed it. But again, you need to be able to visualize all these things. Bueller gave me some praise on this, I believe, on this day, because you know what? He wants to see more of us doing this. Taking mental trades, showing the mental examples, understanding what our plan is. If you can't earn, then definitely learn. I'm doing these. If anything's mental, I'm doing these and I'm learning from it. I'm gaining knowledge. I'm being able to visualize for the future. Like, oh, this works, this works, this works. It's a combination of back testing and confirmation. So definitely do be doing all of that. You can see I got my stop loss set up at 385. That's around this area where we're getting a little bit of resistance to the upside here. So I think really I mean below that. If we cross below that I'm out, because obviously this resistance, which can turn into, which is now support, if we start to go down, if we break below that, I'm not going to want to stay in it. And that's my reasoning on that trade. NVIDIA put on December 12th. Take 6%. Okay, yeah, I took puts here. Really not too much to deal with here. But once I saw we get like this little drop base drop, I kind of see a little bit of that in here. It's a bit sketchy, but this is the trade that I took. Once we start to get this decrease in volume on the way up, and this is a bullish indicator, this hammer, but on really low volume. So I'm like, okay, seems like a decent time to get into some puts. I also wouldn't doubt that we have a level that I don't have marked here, an intraday level. And I basically take profits at the close of this candle because I'm not planning to stay in it. Again, it's a scalp. With these type of trades, if you don't see any of these levels, or it's a very vague trade, it's a scalp. There's not too much that I'm gonna relying on. I'm just relying on that quick move. So, and I do have my reasoning. That's the most important thing. You always have to have reasoning. Well, why wouldn't I get into calls? Well, we have decreasing volume. You know, I mean, I'm expecting the probability that we go down is higher than us going up, and we really don't make too much of a we don't really get too much lower than that. I'm guessing I started to take profits here. That's why I still highlighted it. But again, not the biggest trade, 6%, but that's what we do. Not everything can be 50% gains. And I'll be the first to say, if I had more contracts on a lot of these trades, I could definitely take 50% on a lot of them, because I do leave a lot of meat on the bone, per se, on these trades. You're not going to be able to catch all of it, but I think what I need to work on is increasing my position size now that I have the back testing to back it up, that I will be able to increase my position size. I have the account size. I already have the account size for it. I just need to increase my position size, get at least 1 to 2 more contracts, and keep runners. So that way I can take my initial profits at the first target and take it all the way up to the next one and the next one. If not, stop loss at a break even. It's no skin off my back if I take 3 contracts, take the first initial profits, and then take the rest at break even. That's the same as me having 1 contract and taking it to the first target. Especially now that I've already done this for the past 2 weeks. Being extremely strict, not gambling. I have not gambled. That's why I like to differentiate. And I would like to note that the only loss that I do have is Shopify on 12.6. Again, I'm not going to go into too much detail on the DukeBot trades, but I will say that I do check to make sure they meet my own criteria. That if I like a sort of retest formation going on, I will take the trade. And that's what happened on Shopify on December 6th. I believe it was calls. It had kept dropping, and so be it. I stop lossed out at a minimal percentage. 10% loss. That's not much more than you can ask for, especially, I mean, it's Shopify. I'm not expecting much from the ticker as is. As you can see, I'm really sticking to my list on all of these. Shopify is not on my list, but I do trust Duke on his plays, and I trust in my own intuition on it. It was an 80% entry going on, so just to note that. Let's go to the next trade. This was NVIDIA. Okay, Apple put on December 13th. Now we're getting into the current week. Nice 80% entry to the downside. Not really too much explanation here. As you can see, nice bounce off of this 147.13 level, and I'm taking the 80% entry with increasing volume to the downside, and I take profits at the next target. I take it from 202 to 220 for 9%. That's textbook. These are my favorite trades. I'm not really taking much more than that. I mean, that's what we do. And in fact, even still, I could still technically be in here if I have more than one, and eventually take my any remaining contracts off the table around this area when we start to cross the 9 EMA. And as you can see, we start to get consolidation, some right movement. So, perfect. Doesn't get better than that, unless you got in around this area, which you like to see the sort of testing of the 149. But you can see we're still indecisive. No real reason to enter any particular direction until we get to here. And for me, I'll consider that like the first break, because we're holding that level pretty well. So I would say maybe around here is where you can consider to enter, because I guess I didn't, because I didn't like this increasing volume to the upside. That's definitely the reason. Now I remember. I'm like, why did I not enter here, the 149.15, and take it to this target? So that's what I did here. Instead of taking the trade here, I took it to the next one. Okay, move on to the next one. Amazon took a put on 12.13. I believe I already showed this one. So, again, just a quick overview. 40 and 80% are happening here. Take it down to below here. I like the 49.50s area to take profits at. So yeah, that's just a repeat. I'm guessing I got a date mixed up somewhere. Yeah, sorry about that. I did take an Amazon put, so, and I made money on it. Apple, December 14th, mental. Okay, Fibonacci here. $12.14 mental. What did I do here? Okay, I see what I did. Yeah. I draw the Fibonacci from here to here. Because we start to slow down around here. And then I didn't want to take it to the next candle here. So I guess at that point it was already the high of the day, and I wanted to see some retracement. And we do finally get it. And the levels are not going to be too different around this area. In fact, the 50% would be around this area if I take the Fibonacci all the way up there. So if I did, it's still the same result. So we can start to see we start to reject the control point and take profits here. That unless this was a put that I did, which was it? Yeah, I say I did a put. So I probably start to take puts around this area and take it to the way down to hit the 50%. That's probably, I think that's exactly what I did instead. Once I started to see this decreasing volume here, I'm like, this is super weak. That is the trade. I take the decreasing volume here, see that it's weak, and take it down to the 50%. That's my target. See, those are the kind of trades that we need to take. Reasoning, visualization. I mean, this is still a good play for calls for the upside right here. Nice rejection of the 50%. Take it all the way up to 146 right there. Take profits there. and it makes us, you see, it gives us the lower high to continue lower. So even if you are in calls, that's still a decent trade. No, it's not going with the trend of the day yet, up to this point, but you're making money, taking profits. How many more of these we got? I only got like 5 more. So I'll get through these pretty quick if I can. NVIDIA, another fib retracement, taken from the high of day to the low of day up to that point. I see that we're rejecting the 50% control here, and I'm taking profits around 175.78. Simple as that. Nice retest of the control point and the 178.25 level that we have here. So take 23% on that, 122 to 150. Easy as pie. Nice decreasing volume overall, especially when the Bulls finally get some on a higher close. They still can't take it. They're still rejecting. They just can't do it. They don't have enough strength. The Bears have it. Keep clicking that. Microsoft put on 12/15. Oh, this was good. Man, I'm really using these Fibonacci's, huh? Take it from the high day to the low day up to that point until we start to slow down. Again, it's key that you only draw the Fibonacci retracement when you start to see that we slow down, that we stop moving in that same direction. That is key. As you can see, the Fibonacci retracement control point also lines up with another level that I have. So I'm taking the 80% entry of the control point slash the 253 level that I have marked here. After we get decreasing volume to the upside, still rejecting it, I'm taking profits once we get to a new lower day, basically. So yeah, the 0.0% where I stop drawing the fib. That's my target. It doesn't matter if we go lower here. That's my initial target right there. If I get anything more, I'll take it if I have runners. If I don't, so be it. I'm not necessarily making this my target here. Again, there's been a lot of points that we get fake outs. Although this is a really good target as well, at 251.57. Make it simple. It's as simple as that. Apple put on December 16th. So I'm getting into the final 3 trades here. And it's a bit difficult to see because we did have such a nice volume on the opening candle. But let me go to my actual chart for this one. Okay, that's why. I'm basically taking the retest of the previous day. I'm guessing that's the low. Yeah, that's the previous day low. So I take the retest of that to downside, and I'm gonna let me ignore the. There we go. Now we can see it a bit better. Oh, that's why. That opening candle has got so much volume that it's messing up the volume chart. You see, we got nice increasing volume to the downside. More reason for me to be in. Uh, Again, these are simple trades. I know I keep saying that, but don't make it more difficult than it has to be. Once we start to, you see, we're still rejecting the 135.44. You can eventually take profits around this area. You see, we do get to it eventually. It's just, you know what? This is a Friday. If you're on 0 DTE contracts, which I believe I was, I'm not trying to stay in it for the entirety of this. We're starting to get to 1 o'clock here. The market closes in 2.5 hours. I'm taking my profits, and I'll move on to another trade. That's what I'll do. I'm not gonna just end it here. This was my first trade of the day. Can I end it there? Technically, yeah. I mean, this is the quad witching day. There's so much many options expiring yesterday. You really don't want to be in anything for the tenure of the day. Weird price action can go on, and it did all right for the day. I think most of us had a very successful day yesterday. So let me move on to the next trade. This was a very simple one. Just taking the 80%, taking the lowering volume on the opposite end. Take profits to the next target. Systematic. 8.7% here. Let's see what I did. Oh, I like this potential double bottom happening here. And I wanted to see either bounce up to the current day open or we finally break below it, which we did with volume. Again, it's hard to see it with that opening candle. Let me get to the Google chart because you know what, I want everyone to see how I zoom in without that opening candle messing up the volume. You can see that's perfect. So I get that increasing volume through the previous day low, and that's it. I'm taking profits at that 89.77. Nice scalp, easy. Take money. And you can see we really don't get too far below that either. We're holding that level pretty well until around this area and this area at 230. Excuse that. I am going to need to see what happened. I am hoping that the Vikings made a comeback because I have somebody on that team that I have the tight end Hawkinson on my fantasy team. So I'll check that after this. So that was my final trade of the day. I do have one more that was mental with Netflix. I'll just show it here. Because I used the Fibonacci here, so. Yeah, literally just puts at the rejection of the golden pocket. I saw that we were getting decreasing volume here, and I'm like, okay. I said in the YouTube chat, I like puts here, and I said it right there, and I told everyone, once it closed like this, I'm like, above the control point, I told everyone, listen, if you're for some reason in that was mental on my end. I didn't take this, but if I would take profits, that's it. And as you can see, we get it up to the 100% retracement. So again, it's Friday. Don't want to be in anything too long. And that was a good trade. Good scalp. Take money there. Another reason was, aside from this being a bullish candle-ish right here, because it's rejecting, this is pretty low volume. It didn't get that volume. I only would have gotten it because of the lowering volume at the golden pocket, but instead this kind of turned into some kind of 3-bar play-esque kind of deal. So those are my trade reviews. That's it for this video. I appreciate all of you taking your time. I will have timestamps for this video, showing everyone where the trade reviews start to begin and the beginning of this video. And that'll be all. Thank you all for your time, and have a great rest of your weekend.